Well, Credit Clear has posted half-year revenue of $25 million, driven by an increase in digital collections and a greater share of digital wallets. It sees full-year revenue of between $57 to $59 million. Joining us to get across the results, Credit Clear's Chief Executive, Andrew Smith. Andrew, welcome.
Thank you very much. It's good to be back here.
Indeed, has been a while. In fact, you made that point since you were last here, which was back in 2022, how the business has grown.
Yeah. October 2022, I was being interviewed by Koshi, and I had a look back at the numbers, and I think half one was $6.7 million in revenue and negative $2.7 million in underlying EBITDA. So it's wonderful to see such a good progression in the business. We're now reported $25 million in the half and $3.6 million in EBITDA in underlying business operations. So I think consistent performance has been something that we've been very proud of, and this half we've actually made some very good acquisitions in new markets. So pretty keen to discuss those.
All right, get to that in just a moment. What's behind that growth, particularly when you put it over that frame of the past 3 or 4 years? What's going on in the space you're operating in, particularly digitally?
Yeah, I mean, we operate in a credit and collection space, so accounts receivable through to late stage collections. We don't buy debt, so it's pretty important to sort of distinguish that between the listed companies in our market that acquire debt. Our core value is to help our clients and their customers resolve overdue bills. So what's really sort of driven that growth has been Credit Clear's AI digital engagement strategy, where it seems quite obvious that most people now want to avoid phone calls and gravitate towards more of a digital engagement through their mobile phone in most cases. So Credit Clear's unique selling point and probably the greatest advantage we have over our competition is we've got smart technology combined with good people that allow us to outperform competition and increase not just the work that we win in terms of new business, but the work we get when we're on a panel with other competitors that maybe don't have that innovation that we have.
Are you at ground zero of the AI software disruption? Because we know what's going on in tech at the moment, and the market's trying to work out the winners and losers. So where are you sitting at the moment, and do you see this, are you using this to your benefit of AI, of improving the business and perhaps getting ahead of those concerns?
Yeah, look, Credit Clear, even before I joined the business and Armour Group became part of Credit Clear, were winning awards for AI within Aussie fintech. So they were quite progressive in terms of their approach and use of AI even before it became a popular topic or initiative. And I think that we were quite early at adopting AI technology within our digital team. Not that long ago, we shrunk our digital team because we didn't need as many code writers and developers. So what we've been able to do in the last sort of 6 or 7 months, produce more development features, product integrations through the use of things like Copilot or Claude or other things like that, which has been one area we've really been able to benefit from AI. The next is the largest part of our cost base is salaries and wages. Now that could be call center operators, it could be administration people. What we're doing is looking at those roles and how we can replace them with AI agents. And as we grow, we don't need to grow at the same cost base as the revenue base. So they're two really ways that we're using this AI wave of change to really benefit not just from an internal perspective, but externally in terms of outcomes for our customers and their clients.
So what would your competitive advantage be in that space, particularly for your customers who potentially can use agentic AI?
Yep. Yeah, well, I think that whenever I speak to customers at the moment, they have similar problems, which is cost of living pressures is resulting in lots and lots and lots of inbound traffic from their clients. So that creates a real problem and an overflow in their environment, and they're looking to us to how we can support them. So if we've got solutions that can help manage that traffic through AI solutions, and that can be through allowing them to find out what their balance is, to change or set up a payment arrangement to allow them to pay it within their means, or in some instances where our clients are dealing with customers who are in a vulnerable situation or financial hardship, we've got solutions that we can overlay that allows them to quickly and easily address something that's typically very embarrassing for them. So they don't want to tell someone they can't afford a bill. But if it's through an AI agent, then the engagement and the satisfaction is actually much higher. So trying to get people to come out and share their experience and be honest about their financial situation has been something that most of our major clients have struggled with, and we're able to help them with.
So let's then talk about your growth, particularly acquisitional growth. So you made 2 key acquisitions last month, in fact. You're pushing into the UK. What's the strategy?
Well, the consumer behaviour in the UK is very similar to Australia. The legislation is very similar as well. So the use of our technology in that space won't take a huge amount of development. Secondly, we wanted to repeat what was a very successful strategy in Australia, which is bring great technology with great people business and see we can overlay those, driving up operational efficiency. And then second of all, expand our market share. So the UK is sort of 4 or 5 times bigger as a total addressable market than Australia. And we bought a traditional business, which is like the old traditional business that Credit Clear acquired, and also acquired a digital business as well over there. So putting, A plus B together, hopefully is going to get a much better outcome. So in the early meetings I've had with those companies, they're certainly very, very, very good, fundamentally strong businesses that are going to complement us from a earnings perspective and also a revenue perspective. But what's more exciting is the customer relationships they've built over 20 and 30 years that we can now upsell and cross-sell Credit Clear technology to. So, very exciting acquisitions. I think that it signals to the industry that we're not just focused on our own backyard. We want to start to capitalise on our competitive advantage before, maybe someone else goes in those markets with a similar proposition.
And you tap the market to fund those. You're going to have to go back to the market at all?
Look, we've got $20 million in the bank. That's quite a lot of cash for a company that's cash flow positive and our size. We had a completely oversubscribed capital raise late last year, cornerstone by our chairman, Paul Dwyer, who's obviously got a very strong history in this space and also in the UK market. So I think that we're in a very strong position, not just to grow the business, but to make some smart acquisitions and, I think continue our trajectory into new markets.